because I really wanted to just touch in on what's going on in the bankruptcies. The issue is, really does come down to, how bad are these extremes and versus the averages. For us, where we are still expecting, so for us, it's not as hard of a asset allocation decision right now, because equities or stocks are still quite expensive, and so worried about things might be worse, and a very expensive stock market is a relatively easy decision to say, yeah, look, you can sit mostly on the sideline for that. We want to be buying within the stocks that we are buying. We're really focused on buying quality stocks. We're really focused on buying defensive stocks, avoiding that growth and value sort of areas that we don't think will hold up as well in a downturn or a recession. We're sort of avoiding property stocks, discretionary materials, and we're really trying to get the things that hold up during recessions: healthcare, certain types of utilities that aren't too energy focused, and what's called consumer staples, so the everyday goods that people need to buy. So that's what sort of how we're sitting with this. A lot of it comes back to pricing. So the cheaper we see stock markets get, then the more you can sort of step in front of the fundamentals, because with any downturn, what we will see is that the stock market will fall, fundamentals will get worse, but then at some point you'll see this bottoming where equities and prices actually start to rise in anticipation of fundamentals bottoming. And so that part will be sort of key, is to try and work out how far it goes. But for now, the case is still have lots of spare cash and start getting ready for working out what you want to buy as these markets start to fall.
Nice one. And I just want to let the viewers know, with all our portfolios, so our passive, active, and tactical portfolios, if you're concerned about, potential bankruptcies or a downturn, we do have around 100 different screens and tilts. So, the screens, just an idea, you could screen out the Australian banks, or you could limit the Australian housing exposure if you're concerned about this. On the other side, if you want to add in some stocks, if you think that it's overblown and things are going to turn up, you could add in financials or potentially growth stocks. So just a couple of ideas there for the listeners. You can find out more at nucleuswealth.com.